One of the most important challenges facing this region is the need for power, to create enough electricity to sustain the expansion of the cities and the industrial sector. And that is why we've been focusing on the power sector in MEED this week. And in particular, we've been looking at the private development market. Using private finance to pay for electricity and water is a key plank of the region's economic policies going forward. And this week, MEED has published its power development rankings, which you can see on meed.com. It tells quite an interesting story, but no sooner had we published the development rankings than we heard the news from Kuwait that the huge Al-Zour North IWPP, Independent Power and Water Project, Phase 2 had been cancelled. This was at the weekend. The reasons are a bit unclear why this key project has been cancelled. The official statement is that it is due to deviations, both technical and economic, in the bids. But the question marks about why it has been cancelled and what it means for Kuwait and the PPP market in Kuwait going forward are quite significant. The Al-Zour North IWPP Phase 2 was a 1.5 gigawatt power plant. Bidders had been shortlisted 14 months ago. Negotiations had been stalled and delayed, and now they've been cancelled. And the official line is that Al-Zour II and Al-Zour III are going to be merged. It is unclear what the resultant project will look like. But I think the key questions now are, what does this mean for Kuwait's PPP market going forward? It is a key element of Kuwait's strategy. It needs 10 gigawatts of power by 2022, and using private finance for power stations was a key element. So going forward, Kuwait will continue to expand conventional power, but where will the private finance and private development come from? And that leads us on to the developer rankings that I mentioned just a moment ago. So we have published MEED's updated 2017 list of private developers in the region, and the list is almost identical to last year, and this reflects the fact that it's been a tough year for the private power market. We've not seen any IWPPs or major IPPs going forward this year outside of 2 solar schemes in the UAE. And so what that means is that ENGIE are still the #1 developer in the region. They have 21 power plants that they are responsible for, which generate about 8 gigawatts of electricity. Aqua Power is #2, the Saudi developer. Marubeni #3, one of the bidders on Kuwait, Al-Zour, and Sumitomo is at #5. It's the other bidder from the Al-Zour North power project. The most important bit is next year. We're going to have a big market change next year. Firstly, in Saudi Arabia, we're going to see the unbundling and privatisation of the Saudi electricity company. Second, we have a number of major IWPP schemes in Kuwait, in Saudi Arabia and Bahrain expected to go forward. Thirdly, we have Abdul, Latif, Jameel Energy, a Saudi developer, a new local player in the market. And fourthly, we see the Chinese emerging in the private power sector. So I think this year has been a tough year for IWPPs. Next year is going to be an important year of change. Moving away from the power sector, there's some other important developments in Kuwait. These developments are going to define the next quarter for this year. Some tenders coming to market or planned to come to market in the next quarter. And in Kuwait, we've seen the announcement that the Jurassic gas field project, $3.5 to $5 billion gas processing plant project, will come to the market in the next quarter. 590 million cubic feet a day of gas that will help Kuwait achieve its 4 billion cubic feet a day target by 2030. 7 companies have been shortlisted for the project. This will come forward to tender in the next quarter. In Abu Dhabi, a tender is coming out for the financial advisory for Abu Dhabi's metro and light rapid transport network. In Saudi Arabia, we are seeing developments on the Taif Airport PPP. A financial close on that is expected with the ASEAD and CCC consortium by the middle of next year. Saudi Arabia wants to privatise all 27 of its airports by the end of this year. And then finally, we've seen talks going into advanced stages in Dubai for the Union Oasis Rail PPP. This is the project to develop the real estate property above the intersection of the green and red lines on the Dubai Metro. So a very pioneering development for the region. So it's been an important week. I think it sets up the grounds for the next quarter and into next year for some very important developments, particularly on the PPP side. Have a good week. Thank you.